Um, Now, when we're talking about national income accounting, we also have to be aware that there are a number of transactions that occur that have nothing to do with the production of final goods and services. And these are some examples. So financial transactions, right? So bank fees, credit card fees, those sorts of things. Those are financial transactions. Also buying stock, buying bonds, like stock from the stock market. These are all financial transactions that have nothing to do with producing something. So we wouldn't want to count these as a part of gross domestic product, right? Other things like transfer of secondhand goods. So when you buy a used car, for example, that transaction had nothing to do with production. That car had already been produced in some earlier year, and so we wouldn't want to count when you purchase a used car. We wouldn't want to count that transaction in gross domestic product because we're talking about production in this year, right? And so we wouldn't want to count that. There's a number of other excluded transactions as well, but the used items, secondhand goods, and financial transactions are the main ones. So looking at financial transactions in some more detail, this again includes the purchase and sale of securities like stocks and bonds. Financial transactions from government transfer payments are also excluded from GDP because it's just money moving hands. Again, there's no production involved. And these include things like Social Security payments and unemployment benefits or compensation. And other financial transactions that are excluded from GDP are also private transfer payments. So this includes gifts, right? Gifts of money or corporate gifts, bonuses, and things like that. Actually, bonuses are part of income, not gifting. Sorry. So private transfer payments are similar to government transfer payments. They're not included in GDP, and these include things like individual gifts and corporate gifts. So when your grandmother gives you a $20 bill for your birthday, that's not part of GDP because nothing was produced in that transaction. No final good or service was produced in that transaction. Looking again at secondhand goods, right? Again, we're not going to include the sale of used computers, guitars, or snowboards as part of GDP. And the reason is that we've already included those things in GDP in the year that they were produced, right? So we don't want to count them again. Other things that are excluded, household production. This is basically you doing your own laundry, washing the dishes, right? These things that have value, but there's no economic transaction involved, and so there's no money transaction. So we can't, even if we wanted to, it's really hard to include these things in production, but in terms of GDP. But we also probably don't want to because there's no transaction of money, right? These are just things of value that you're producing on your own at home or whatever, mowing your grass, right? These are all considered household production. And then the last one, underground transactions are also not included in GDP. So this includes both legal underground transactions and illegal underground transactions. And if you're wondering what the difference is, a legal underground transaction would be something like you paying your friend cash to mow your yard. That would be a legal underground transaction. It'd be like, getting paid under the table, so to speak. Whereas illegal underground transactions would basically be things like drug dealing. So that's the difference there. Now, there are some limitations to GDP. It's not a perfect measure of economic performance or a country's well-being. Again, as we saw, it excludes non-market production. So when you mow your grass or you wash your dishes or you clean your house, That's production, right? But it doesn't take place in a market. And so it's not part of GDP. So to some degree, when we look at GDP, it's really understating. It's understating total actual production in the economy. It's really only looking at market production, not total overall production, because it doesn't include household production. And it is not really a good measure necessarily of the well-being of a country. So I encourage you to look up a list of the world's happiest countries, and you'll notice that the United States is not number one, even though we have the world's largest economy in terms of GDP. So there you go. Just because we have the highest production doesn't mean that we are the world's happiest people. So this is another limitation of GDP. So to wrap this section up, GDP, it's a measure of the value of production in terms of market prices, and it acts as a decent indicator of economic activity. What it is not is it is not a measure of a nation's overall welfare or well-being. Okay, so don't think that that's what it is. It's simply telling us about economic activity. Okay, it's not telling us about things like mental health or happiness in a country, right? Although they are correlated slightly, right? But money doesn't necessarily bring you happiness, in other words. All right, so let's look at a quick international example. Some complications in assessing the gross domestic product effects of the free web or the free internet. There's a growing number of internet activities, such as massive open online courses that are being left out of GDP because they don't involve any payments, explicit payments, right? They're basically non-market production, so they're not part of GDP. Now, there are current estimates that indicate that the value of these free items would be around 0.1% of nations' reported levels of GDP. So not, it's basically a tiny sliver, but it's not insignificant. It basically accounts, at least here in the United States, to as much as $50 billion of value per year that's not being included in GDP. So that's pretty interesting. And a behavioral example, should an economic dashboard supplement or replace GDP? So something that's a little bit more broad, right? A dashboard like you have in your car where you can see different gauges that tell you the sort of performance of your vehicle, right? So just looking at GDP, that's kind of like a car that only has a speedometer. It doesn't have things like a fuel gauge or a tachometer, which tells you the RPMs of the engine, or the oil pressure gauge, right? So a lot of critics have proposed replacing or at least supplementing GDP with a sort of dashboard, right? So several different measures, looking at them all at once, right? So we can look at things like labor force growth, education, sustainability, non-renewable resources, right? Some things other than just economic activity and production. And some of these same people also support the inclusion of indicators of general satisfaction in family and community relationships. So happiness indexes, things like that, which there's a lot of evidence that suggests that these things affect people's productivity at work. So this is maybe a good idea, but it certainly is not the mainstream way of doing economics currently.